Now that we know what product costs and period costs are, we need some principles for determining the difference between the two. Some are quite obvious, but then we're going to get other ones where it could be a product cost or a period cost. So we kind of need some rules to follow. What are we talking about? Well, hopefully we've already learned from an earlier video that expenses for a trading firm which sells inventory are called cost of goods sold if they are required, that expense is required to get inventory from the supplier to our business to get the inventory in a condition and location ready for sale. And then what we said was, for those expenses, some of them we can allocate to individual units of inventory on a logical basis. That's going to be called a product cost. But the ones that are required to get inventory in a condition and location ready for sale, but some we can't allocate to individual units on a logical basis, we're going to call those period costs. We will still have other expenses like we always have, and we won't talk about those in the rest of this video because we'll deal with them later. We're just talking now, how can I spot the difference between a product cost and a period cost? So we need, some things are clearly product cost and some things are clearly period cost. So we did an example earlier where on January the 1st, we bought 10 units of these couches here. We're going to sell them for $500 and we had the following costs. And what we did was we said the cost of goods sold section now is still all inventory, the expenses to get inventory in a condition and location ready for sale. We just break it down and we said some can be allocated logically to each unit, product costs. Some can't be allocated logically to each unit, period cost. And we just went through each of these and said the supplier's price is clearly a product cost. It is required to get the inventory ready for sale. You have to buy the inventory in order to sell it. And it was $180 per unit, so that's an easy one. The delivery inwards was also a product cost. So we put that in there. Why? Because it is required to get the inventory ready for sale. We can't sell it or get it ready for sale unless it's been delivered. And it was $200 for 10 units. Pretty easy. But then the customs duty, which is a cost of goods sold because it's required to get inventory ready for sale. So customs duty happens when we import the inventory from overseas. So you can't sell the inventory without incurring that. But we said that was a period cost. And what was the difference? Well, marketing and delivery delivery cost outwards to customers were other expenses. We won't deal with those now. But let's look at the two in green that we did call product costs. They could be logically allocated to each individual unit. The purchase price was easy. It was unitized for us. It said $180 for each unit. And so was the delivery inwards. We got a total. It was $200. It was charged for those specific 10 units. 200 divided by 10 was $20 per unit. But we couldn't do that with this one, the customs duty. We called that a period cost. So why though? And it's all to do here, in this case, it was per annum. And annum is just a fancy word for year. But it could have been per month. And I guess what that means is, did we buy other couches during the year? So this says, $200 per annum. Was it just for these 10 couches? We don't know. It probably could have been for other couches during the year as well. And does the fee cover other inventory too, or just couches? Like, does it cover like fans or toasters, things like that? We don't know. So because there's no logical basis to allocate that, we called that a period cost. We could not allocate it to individual units on a logical basis. So what we need is some principles to help us understand. And we're going to talk about these 5 principles here. So let's go through each one. These will help us spot a product cost or a period cost. And what we'll do for each example is have business A on the left, business B on the right, and look, they'll do things differently. Let's get started. Both businesses buy inventory with a purchase price of $20 per unit. So for both businesses, that would be a product cost. That's an easy one, the purchase price. But what about this one? This business incurs packaging expenses, so maybe pallets to get the inventory delivered. It was $50 for 10 units. This business also had packaging costs of $50. However, it was for 1,000 units. So business A might say that is a product cost called packaging, and it was $50 for 10 units, so that's $5 per unit. Now, over here, the packaging was $50 for 1,000 units, which I think if you do the maths is 5 cents per unit. Maybe. Something tiny anyway. The point is, that's actually a really small amount, 5 cents per unit, so it might just be easier to call that a period cost and say we can't allocate that and just say there's packaging of $50. So what was the principle here? You should really only allocate costs that are relevant. What does relevant mean? I guess it means material or big enough to influence your decision making. You should only allocate those ones as product costs. If it's too small to affect decision making, just classify it as a period cost. Let's take principle number 2. So we're going to start again. Purchase price for both businesses is $20. Actually, sorry, it's $2,000 here. So the product cost here for business A is they buy inventory for $20 per unit, and business B buys a different type of inventory for $2,000 per unit. However, they're both going to incur the same packaging expense. So $50 for 10 units and $50 for 10 units. So for business A, $50 for 10 units would be $5 per unit. It makes sense to call that a product cost. But over here, $50 for 10 units is still $5 per unit, but I'm going to call that a period cost. I'm just going to call it a period cost called packaging of $50. It was the same $5 per unit, so why did business A call it a product cost, yet business B call it a packaging cost? Well, principle number 2 says what's relevant or material or big enough to one business may not be for another business. There is no set dollar amount that is or isn't relevant for every business. This business decided the packaging cost was relevant to the cost of each unit because it was $5 packaging on a $20 purchase price. That's like, what's that? 25% of the purchase price was incurred in packaging. That's very relevant. But over here, a $5 packaging expense is not really all that material or relevant when the product price is the $2,000. So it might just be easier to call that one a period cost. Third principle, we'll start with business A and business B, and we'll say both units have an inventory with a purchase price of $20. So that will be a product cost. Then we're going to have advertising here. This business A takes out advertising and says for $200, we've got 10 units of this inventory available for sale, come and buy it. Whereas this business has $200 of advertising per month. So what should we do? Should we allocate this per unit? So we can see here it's $200 for 10 units. That's $20 per unit. But we're actually going to call that another expense. And this one here was advertising, it was $200 per month, so we couldn't allocate that to each unit. So we would also call that another expense. What is the principle we learned here? Even if something can be logically allocated to each individual unit, so you could logically allocate this $20 for 10 units, that'd be 20. Why didn't we call that a product cost? Because it is not required to get inventory in a condition and location ready for sale. So look out for questions where they unitize something that would be an other expense, because even if you can unitize it, like you could here, you can logically allocate that, it will always be another expense. It doesn't matter whether it can be logically allocated to each item of inventory. If it's not required to get inventory in a condition and location ready for sale, it's not a product cost. Fourth principle, we've got business A and business B, again, purchase price of $20, so that's part of the product cost for both businesses. Business A has cartage inwards for $100 for 10 units, and business B has cartage inwards of $100 per month. So for business A, we can logically allocate that. $100 for 10 units is $10. It should say cartage inwards there, not packaging, but $10 allocated as a product cost. But this business would be packaging of $100. So if you look at it, it was actually the same amount for both businesses, $100. So what's the principle there? Something that is a product cost for one business may be a period cost for another business. It all depends on whether the cost can be logically allocated per unit. So here, it was $100 for these specific 10 units, was a product cost. But here, it was per month. Now, when something's per month, we don't know whether we bought more of it, did it cover other inventory? So without that information, I can't logically allocate that. So I call that a period cost. Now, our final example is kind of a complicated one. Let's take business A. It buys toasters from suppliers for $20 each. Well, clearly, the purchase price for business A, part of the product cost, is its price of $20 per unit. Business B also buys the exact same toasters from suppliers for $20 each. So for them, the product cost here would also be $20. So far, no difference. Let's look at the delivery. So for business A, the supplier charges $30 for cartage inwards, and that delivery includes 30 toasters. I can logically allocate that. What I could do is say cartage inwards, freight inwards, delivery inwards, whatever you want to call it, is $1 per unit. It was a $30 cartage inwards fee, and there were 30 toasters, so 30 divided by 30 is $1 per unit. What about business B? They also got charged $30 for cartage inwards, but maybe they only bought 10 toasters. So should we allocate that $30 for 10 toasters as $3 per unit product cost? We could definitely do that. But what if that same delivery truck also had 10 fans and 10 couches on it? So this is a home furniture business and electronics business. They bought a bunch of stuff. Can I now go, there were 30 units, It was a $30 fee. Can I allocate that logically to each toaster at $1 per unit? I'm going to say no. And what I'm going to say is the reason I can't is because toasters are very small and light. A fan is very large and light. And a couch is very large and heavy. I guess I can't logically break this down at $1 per unit because they all took up different space and weights of the delivery. There's no logical way for me to do that. So what I'm going to do is call that a period cost. I couldn't say $1 was for toasters because and $1 was for couches because that, a couch takes up way more space than a toaster. So our fifth principle and our most complicated principle is saying a product cost can only be logically allocated per unit. If there is no logical basis to allocate a cost, we call it a period cost. So business A, $30 for 30 toasters, easy to logically allocate that at $1 per unit. Business B, $30 for 30 units, but I couldn't allocate that because the units were toasters, fans, and couches. Different inventory sizes, different inventory weights. So if a cost is incurred which covers multiple types of inventory, e.g. delivery for toasters, fans, and couches, this may be too difficult to allocate logically to each individual unit. And what we do in that case is just simply call it a period cost.